Hey y'all, how's it going? I'm trading the ES futures on a 2000 tick chart with a 21 EMA. So I've got the overnight high up here and the overnight low down here. These are our key levels for the day. So starting off, I started trading at this area right here. This is 8 Central Time as we were pushing up to make this double top right here. And so when you bounce right here, that's when it's pretty clear that we're going higher with this, trend line right here. We can see that it's fitting well off these lows. Now the highs weren't as consistent at first. If you have it right here, of course, it's broken out right there. An overshoot. Now, if you have it up here, eventually, notice here it does overshoot right there as soon as we get to it. Now, we'll get to that when we get to it. So here, you bounce off of the overnight high here. Now, when you come off the overnight high like that, notice it ticks higher and traps lower. It looks like a very strong push down there, but it doesn't go farther than that one bar. Now, the first thing that I would want to get from this area is a reversal pattern down, a failed second entry holding below the EMA. That would be that's what I would look for here. But what happens is we just bounce right off the EMA. We go sideways here. Now, just because we can't form the reversal pattern down doesn't mean to immediately buy. I mean, this is getting really choppy. I mean, it's just going into a small congestion. You don't know if it's going to keep going for longer. You don't know if it's going to work out on this green bar right here. So there's really no reason to enter long, unfortunately. You can't go short either. It's just it just turns into a messy area here. Now we break out of the overnight high here, and we only have one attempt to fade back in. When you break out of an overnight high or a range or a congestion, when you break out, you want to see 2 attempts to fade before you enter along with the breakout, because most breakouts will fail. And so you want to see 2 attempts. That's how second entries are formed. That's how the market moves. It moves in pairs of 2. And so you want to see 2 attempts to fade back in before you enter along with the breakout. You only get 1 attempt to fade back in. And so there's no reason to enter long right there. We push up higher here because a breakout pullback is not enough for the breakout pullback with 1 attempt is just not enough. So anyway, we push up higher here. We reach this measured move. Notice these blue arrows here. As soon as we reach that measured move, that's at that high right there. And then we just break out. It's not a breakout technically, it's an overshoot. An overshoot is a breakout of the highs of an up channel, and then it would be a breakout of the lows of a down channel. So this is, we overshoot. We have this attempt down right here we attempt to reach some kind of resistance, but we just bounce without reaching anything. And here we start pushing down again. We start forming this channel here. It's pretty clear. We have downtrend, break, new low. So this downtrend is played out. Once you get that break to a new low, it's played out. Notice how it was making a really good double bottom here because it was fitting off these lows right here, and then it bounces at that same area there. Now, notice this measured move here. As soon as we reached this measured move, we went sideways, which is very common, especially before reversing back down, which doesn't happen here, but you can see that there was an attempt to reverse back down there. Now, back to this. So downtrend, break, new low, making this double bottom. Unfortunately, there's no way to safely go long still because you have no good signal bar there, and then this bar right here rejects the EMA. But we do push up higher here. We get this push up. We push back down. We have this first entry long, second entry long. Now, the problem with going long right here is you're at this measured move right here, and then after you reach a measured move, that's where you can expect a possible reversal back down, especially when you have a range in play that you could fade still. And also another thing to consider here is you have this measured move in play here. So just looking at these 2 down arrows here, you can see this measured move is in play while you just met this measured move here, which you'll often reverse after reaching measured moves. So it's not a good thing to go long after reaching a measured move like that, and then you're also having this measured move down. Now, I want to show you how it didn't reach the lows right here of this range. And it did come within a tick of it, but it's still important because what could easily happen is you tick higher than this green bar, and then you attempt to reach this measured move down here, and then you'll be trapped into it. And so, that's just something to consider. It might not reach that measured move down there, assuming it did end up forming a trap. What could happen is it tick higher, and then it just stops you out at the range, and then bounce. Then you can get another long off those lows down there after you get a second attempt to reach that measured move. But anyway, it just bounces up here. It's not going to work out like this every time. A lot of times people will get trapped in an area like this, so just be careful on trades like that. So anyway, we do push up higher here, and then notice how we have this push up here, break, second push up. I'm going to remove these just to make these other measured move clear. We have this push up higher here, break, second push higher. It's a clear measured move. Those legs are clearly connected to each other, and as soon as we reach that measured move, we start pushing back down. Now, this long right here, I didn't take it in the moment because, you know, I was looking at this, how we just met this measured move, and then it was getting a little bit sideways. But this is a really small trade. I do think this looks like a good trade here. I was kind of hitting myself for not taking it. Now look at this. So you drag that there. Or there we go. So you can see that it stays within this right here. I would probably try to get in one tick lower. Yeah, I wish I tried to enter this. The only problem is you just met this measured move here, but when you keep going up higher like this in price and you attempt to reverse right here and then it just continues with the trend, that's a failure to reverse right there, which is that's a strong thing, a failure to reverse here. And so even though it's a small second entry, and you know, the point is it's a small target as well, it's a small trade. Even though it's a small second entry, it's a small trade with the very clear, strong bullish bias here. So I do like this here, and I wish I had entered that. Off the EMA, if this was a first entry, there'd be no way you can take it, because you're retesting the this level right here, this trend line right here. You know, it broke out here, or it overshot there, and then it also overshot there, but it's reacting every time. Like it's still going back down at that area there. So you want to see two pushes down before you enter long, because when you come off one side of a channel, you don't want to enter after first entry. You want to see two attempts to the other side, and they're small attempts here, but it's a small trade. So anyway, I do like that. I wish I got in on that, but unfortunately I did not take that. So anyways, we push up higher here, and then here we start correcting back down. Notice how we have you can see those couple legs in here, but that's really just one leg down. But you can kind of see how on a smaller picture you'd see two legs, see first entry, second entry. But it's right into this trend line here. And you know, it just keeps on going higher. So anyway, we push up off of it. We have this small first entry short, second entry short, which it really just goes higher here. I don't count all those ticks like that, but we push up. We start correcting back down here, and then after we bounce up here, that's when this channel becomes pretty clear. Now, you have this right here. Notice how if you got it off those lows and you have it off that high, then you would see this overshoot. But it did recover immediately after, and then, you know, it started reacting off of this trend line again for a fourth time here, which means that this channel, assuming that it overshot here and then you can expect a break, it clearly recovered at that point. So when it recovers like that, you can move up the trend line there just to see how it reacts later on, but it didn't hold for very long here. So this right here, we're extremely bullish at this point, and then we're overshooting. So this main channel here is still within this overshoot right here. And now you're starting to form another channel within that. And so let me get that exact right there. I don't know how that got all messed up. So we're starting to form another channel while we're overshooting this larger up channel here, and we're also just coming out of this blue channel right here as we break out right there. And so I like this right here. We have first entry long, second entry long. It's a pretty big picture here, but I only did 1-to-1 because, you know, you were buying very high, because when you overshoot, you can expect prices to make a break. So when you're heavily overshooting this channel here, that's a sign of being overbought, because you know how some people, they have like RSI indicators, stochastics or whatever, to try to see when try to see when price is overbought or oversold. The way that I tell if price is overbought or oversold is by overshoots of trends. And so when this trend right here, you know, at first it was having the smaller overshoots, when it has a clear overshoot here, and then one attempt to reverse down here, second attempt, of course you have this attempt right there, but the count reset right there. So then we have first attempt, second attempt, holding for a fourth time off this trend right here. I do like going long there, you know, to ride it to that swing. Now, of course, it goes a little bit higher, but I could have pushed it a few more ticks to the high of that swing, but I just decided to keep it 1-to-1, given the fact that overshoots do often lead to break, and we could reverse, and also it was into the EMA. So anyway, we break out of it here. It does not hold for a fifth time. We just burst on through. Notice how these two legs down here eventually turns into one leg down on a bigger picture. We get a break and a second attempt to push down here. So now we have these two legs down here. Now, this trend line is starting to hold again, because after an overshoot, you expect a break, yeah, but price can also recover. The channel can recover if price holds off the trend line. And so I didn't want to buy immediately because sometimes it'll have a small reaction and then break on through after an overshoot like that. But what ends up happening is we push up, we get this higher low right here. There's still no reason to enter long. It's closing below the EMA. Right after a sharp push down, it could still break. It's not like it's completely recovered at this point here. But then when you get a failed second entry, you see first entry short, second entry short, failure. That's 3 bounces off of this trend line. At this point, I consider the channel to be recovered, because even though you had that huge which I'm going to remove this out of the way just for a sec so it's easier to see. Even though we had this strong overshoot here, we are now holding for a 3rd time off this channel. That's reconfirming this channel. You expect price to try to break out after an overshoot like that, but it's holding for a 3rd time with a perfect failed second entry. You see that first entry short, second entry short, failure. Now, it did get a little bit choppy here, and you can see this resistance right here that you're entering into, except you got to look at the bigger picture stuff. This measured move in play at the same time. You have that measured move in play, you have the first attempt to reach it, second attempt to reach it, failure, and then you're entering along with that failure after the full failed second entry forms right there. So I like that right there. And then after we push up higher here, this is not quite 1 to 2, because if I were to do 1 to 2, I was, which at first I had it at 1 to 2, but after we pushed down here, I realized that we could be going into this right here. And so then I just lowered it about a tick or so. I lowered it to 1.9 R. So 1.9 R is just 1 tick less. And then it pushed on through, and it would have filled the full thing anyway. But I just wanted to be safe to make sure I don't get some kind of early bounce from this and then my target not get filled. But we do push up higher here, and then you can see this. We push lower here. You can see that first entry long, second entry long. Now, considering we just came off of this trend line right here, it did, break it, but it's clearly reacting off of it. We have that 3rd bounce off that trend line right there. I would just want to see a clear, two clear legs back. I mean, you can see those 2 legs right there, but I would want to see more separated legs back, holding above the EMA with room, which unfortunately there's no room here. Of course, you have room if you enter on that bar, but it's below the EMA, which you don't want to see right after coming off a resistance like that. And then when you do close above right here, you can see you'd have to push it quite a bit through this trend line right here, which you don't want to do. And then here we break out again. We make this double top right here. It's clearly starting to form this range. We have these lows here, and then after we push off there, we can see that it's fitting pretty well at the highs. We have this first entry long, or whoops, I didn't mean to move that. We have first entry long, second entry long, and then we get this good signal bar here, but it's right into this double top. It's, forming this range right here. I would just avoid that right there. So anyway, we push up higher here. We start getting choppy around here, clearly going sideways. We bounce off this key entry point again, but at this point, after we have all these small little, pierces through the trend line, I would look at extending it to see how it holds, and now you see it's fitting cleaner. And then I would look to raise this right here. Notice how it's fitting off those 2 swings right there. So this trend did recover, in my opinion. It didn't last for very long. It was kind of barely hanging on after it recovered here. It wasn't bouncing very far off the trend line, and now we've broken, of course. So anyway, let me extend this range a bit. So we're going in this range here. We break out the highs, we fade back in, and then we have these strong pushes down. So we can see this right here, which there's no way I would want to go long here. Even though this uptrend has a break and you can expect a new high, this is a strong push down right there, and it's only 1 push down. I would want to wait before I go long to try to make a new high for this uptrend. I would want to see 2 clear legs down just like we have here, and then a push above, and then some kind of reversal pattern to go long above the EMA. Of course, a reversal pattern from this these pushes down here to continue with the overall trend. And so best bet from this area here is to just wait on some kind of failed second entry holding above the EMA. That would be the most ideal trade. So anyway, that's going to do it for this video. Hope it helped in some way, and I'll see y'all next time.